Good afternoon, welcome to Midcap Radar. I am Sonal Bhutra and with me is Reema Tendulkar, and these are the top headlines that we are tracking at 1:30 p.m. Midcap's hold gains even as Nifty and Sensex slipped after an 8-day winning streak. Auto and utilities drag.
Paytm gets a thumbs up after it assures investors that it's on the path to profits. The management says it's positive of a break-even in terms of EBITDA by September next year.
PVC pipe manufacturers like Astral, Apollo Pipe, Supreme Industries gain on price hikes buzz. ICICI Securities has a buy rating on Astral.
Policy Bazaar owner PB Fintech sees a 5% block of shares likely sold by SoftBank getting swiftly lapped up.
Okay, those are the top headlines. Good afternoon, Reema. Well, it's a Friday and markets are not really in the Friday mode. They were last couple of days, and today it has come in for some profit taking, and the market's slightly off the lows but still down 150 points. It's really the mid-cap side of things which are doing so well, and that index is up 206 points. And for the larger part of this week, Reema, it's the mid-cap index which has outperformed and is up another 200 points and ending the week very strong actually.
Indeed, right? Remember yesterday I was trying to show that graph with my hands, like how the Nifty's got a downward sloping chart, and at the same time the midcap has an upward sloping chart, and that's repeated itself yet again. But let's kickstart the show with our midcap spotlight. Westlife Food World is the stock which is we are tracking right now. The management unveiled its 2027 strategy yesterday. The McDonald's operator hopes to see sales at 4 to 4,500 crore by 2027. Shilpa Ranipeta caught up with Akshay Jata, the executive director of Westlife Food World, and began by asking them in detail about their sales target, how they set it, how they plan to achieve it. Listen in.
So in terms of Vision 2027, our entire endeavor is to double sales. Right. When we put it all together, our entire vision was to double sales and do that on the back of growing AUV. So it all revolves around growing our meal relevance, our omni-channel strategy, and I think that's working out very well. So we're pretty confident to achieve this. In terms of the current FY, we've had a couple of strong quarters behind us. We're seeing momentum continue, and we're hoping to, deliver on the Vision 2022 by the end of the year, which means crossing the 2,000 crore run rate.
Right. And talking about the AUV also, just run us through again what the targets are and also what will drive this AUV for you.
So in terms of AUV, our targets are to grow it over our base of existing stores as well as our new stores. So we're planning to open roughly around 300 restaurants over the next 5 years. So our current base of stores will grow AUV a little faster. The newer stores take a little longer. So it comes down eventually to SSG and total sales. So our target is to double sales, while growing the current 63 million rupees of AUV across the system.
Right. And talking about the store expansion also, you did say that expanding in the South will be one main target. Can you run me through what the contribution of stores from the South is currently, what the mix is, versus West versus South, and by 2027, what do you see this mix as being? Also, if you can touch upon your expansion in smaller towns as well.
So in terms of the South, I think the split is roughly around 40 to 45% of our stores are in the South. We've maintained the pace of opening stores there despite it being a region, where brand relevance and product market fit has taken a little longer. Right. Today we feel we've reached that cusp and we've established it quite well. In terms of moving forward, I think we said around 50% of our stores will be in the South. So I think by the end of 2027, you should see a split that's closer to maybe 45 to 50% in the South. And we're going to continue to grow our market leadership in the West as we always have. In terms of small and emerging towns, like I said, we've had very promising results because of the rapid urbanization growth, which has given us good momentum. We've got good case studies in terms of stores performing almost 40% higher than the system average. So moving forward, again, it's going to be a focus where maybe around 50 to 60% of our new stores will be in such towns. And it's making McDonald's a destination there that's really working for us.
Right. And if we talk about margins also, what's the kind of margin expansion that you are looking at as part of this vision also, and what really are you looking at driving that? Will that be McCafe, or beyond that also, what's the premiumization strategy also like, and what will be the key levers for your margin expansion?
So in terms of the volume growth, obviously long-term value creation comes from converting that into profitability and a strong balance sheet. So as we continue to grow volumes, our strong focus remains on growing margins. So we have levers like product mix, cost optimization, operating leverage, and working on other line items. The target we've given is, as we work on these line items and grow volumes, we plan to land at around 15 to 17% EBITDA margin pre-Ind AS, which will convert into 18 to 20% post-Ind AS EBITDA margin.
Right. And currently, are we seeing an improvement in margins? Because we're seeing commodity prices also cooling off. In this current fiscal, if you can give me a margin picture, what that is looking like. And, you know, there was some price hikes that you had taken on the menu. Do you anticipate more, or do you think we're off those peaks with a lot of commodities cooling down?
So I think we delivered a strong quarter in terms of profitability that I can talk about. Our last quarter of Q2, I think our margin was closer to around 17% post-Ind AS, which is very strong on the back of a very, inflationary environment. And in fact, our gross margin also was the highest that we've delivered ever. So we've been very good at managing, this inflationary pressure because it's not new to us. And like I said, we continue to work on multiple line items where eventually it all translates back into good operating profits.
And I want to talk about McCafe also. That's been one segment that has been growing really well, also margin accretive. 100% stores will have McCafe, you said, by 2027. But if you're talking about growing beyond that in terms of McCafe, growing McCafe itself beyond just expansion, where will the growth come from, and how much does it contribute now, and how much do you see that contributing to overall revenues by 2027?
So, McCafe is part of our McDonald's business model, right? It's a new occasion and a new experience that customers can get. Correct. So our immediate target is to get to 100% penetration. It's really premiumized, the experience for customers. They're loving the quality cup of coffee that we serve. So I think the expansion is going to come from ensuring that we offer this experience across all our stores. Right. And I think that, moving forward, we're looking for it to hit around 15 to 18% in contribution of total sales.
Okay, that is our spotlight stock today and the management commentary coming in as well. For now, we'll slip into a break. Up next, we'll be joined by Hemant Kapadia of Choksi Securities for a technical check on the market. Stay tuned. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. And as we have been pointing out, Midcap's really the stars of the day and the week as well. So let's talk about our favorite segment, Midcap's Movers. We have Vivek to take us through the midcaps that are moving around in trade. Vivek.
Well, good afternoon. Clearly a day of outperformance as far as the broader end of the markets are concerned. And some of the stocks that we're seeing today are seeing very, very strong price action and even, backed by very strong volumes as well. Let's look at some of the stocks today at a fresh 52-week high. APL Apollo Tubes continues a strong run. BHEL, now this particular stock on the back of increased thermal capacity that's required as far as India is concerned, has seen very strong upgrades in the quarter gone by, and this stock continues to surge higher. Dish TV, we've been pointing this out for the last couple of trading sessions as well on the back of sentiment for the upcoming IPO in this particular space. And Exide today continues its up move for the 6th straight session. On the other hand, some of the stocks today, a lot of stocks, that have hit the volume trigger, very strong volume back buying. Skipper hit the upper limit. Sadbhav Engineering continues its up move, some management change over there. Moltech Technologies and Raymond today continues its up move, nearing towards the 52-week high. Very strong volumes on this particular name. And, some of the other stocks today, HCC, this particular stock continues its up move on the back of, the debt resolution plan that the company has given. MTAR, Talpros, as well as Pondy Oxide today, all of them moving up on very strong volumes. On the other hand, some of the stocks that continue to see quite a bit of a loss. Unichem Labs, surprising name here, down almost 7% on strong volumes. Liberty Shoes, Tejas Networks, and Repco Home, all of them are seeing profit booking in today's trading session.
Thank you very much for that. Let's talk about the market technicals. Hemant Kapadia of Choksi Securities is now with us on the show. Hemant, afternoon. Rough day, right? We had a very good uptrend on our hands, and today we've clearly taken a bit of a backseat, gap down opening, and we've sold from those levels today, while the mid-caps continue to be very strong. What's the trade?
Very good afternoon, Rima. Thank you for having me. Markets are a bit stretched forward, so it's natural getting and caps are doing well. So see a buy call on a higher top on the daily chart. The mechanical indicators have turned positive. positive divergence. So buy on both at 850. Stop loss of 835.
Heyman, we do have you on a scratchy line, so we'll repatch that connection for you because we're not able to hear you. Until the time we do that, let's get stock specific now. Let's focus on Paytm. Brokerages are bullish on the stock after the management and its analyst meet says it expects to break even in terms of EBITDA by September next year. Surbhi is joining us with the latest on that. The stock is up 4.5%. Surbhi.
Hi, thanks for that. Paytm management hosted its first physical analyst meet here in Mumbai yesterday, wherein they have highlighted a large growth opportunity for the payments business in India. They have said that it has a potential of 100 million merchants and more than 500 million payment customers, and this opens an opportunity to cross-sell financial services and other business offerings. They also provided some granular details on their key revenue drivers across business segments and the breakup of key costs, which will help them to achieve their adjusted EBITDA break-even target by FY24. Additionally, they said they don't see any significant regulation risk to affect its payments margin. The net payment margin should largely remain steady even if there is a reduction in MDR, which is the merchant discount rate. They said on credit cards, they have seen significant pickup in the business momentum. On commerce business, management disclosed that the GMV was close to 2,000 crores and the revenue was 130 crores. On profitability, management expects to become free cash flow positive in the next 12 to 18 months. On back of this, brokerages have released their reports. Goldman Sachs have a buy rating with a target price of 1,100 rupees. Morgan Stanley has a buy target with a target price of 695 rupees. CLSA again has a target price of 650. JM Financial has upgraded its rating from sell to a buy with a target price of 600 rupees.
Thank you very much, Surbhi, for that. We're back with Heyman Kapari of KR Choksi. Heyman, we missed what you were telling us earlier. We couldn't hear you clearly, but tell us the trade that you're recommending.
Yeah, Rima, firstly, a buy on Voltas. It's a counter call oversold, high tops, high bottoms, above the 55-day exponential moving average. Mechanical indicators are given across our buy, Rima. So buy on Voltas at 850, stop loss 835, target 880. Secondly, a buy call on Tech Mahindra. IT has done well. The mainline stocks have done well. I think the mid-cap IT is now actually playing catch-up. So a buy call on Tech Mahindra at 1110, stop loss 1090, target 1150. Looks very good. Complete turnaround on the weekly charts, medium-term bottom in place, oscillator supporting move. And lastly, a buy call on Muthoot Finance. It's around 1126, so one can buy Muthoot at around 1125, target of 1100. Stop loss of 1100, target of 1175. The breakout is at 1140. I believe the target should get overshot. Once again, complete technical turnaround, rounding bottom, oscillators in place. Rima.
Sudden up move in sugar names. So just pull up Bajaj Hindustan, Rana Sugar, Shri Renuka. Very sharp spike seen in all these stocks, and intraday will come up for you on your screen. There you have it. And speaking up on the volumes as well. For the markets per se, we're trying to get off our low, so the Nifty's recovered about 50 points from the day's low, and it's courtesy up move in names like an SBI Life. Axis Bank is off from the day's low. In fact, it's in the red, but it's at the day's high, and Reliance Industries is now back in the green by a smidge, but it's moved higher as we can see.
Yes, it has. So all these stocks in focus, but one space that has been doing really well for the last couple of days is the tire space. Let's talk about JK Tyre and Industries delivered a good quarter too. A colleague Danish caught up with Raghupati Singhania, who's the managing director of the company, and started by asking about the outlook for the rest of the financial year as well as the demand scenario. Let's listen in.
Well, we're looking to the rest of the year with a lot of hope and expectations. And the major reason is that we find that the plateauing in the raw material prices, and even we hope that the oil prices reduction, which are merely indicative for the moment, of course they have a lag effect of 2 quarters at least, should sober down the market, and at least they will may not be any increase, substantive increase. The outcome is that we should be able to improve our EBITDA margins, and we have in the last 2 quarters as well, quarter on quarter, been able to improve a couple of basis point EBITDA margins, and we see that in the next 2 quarters as well, we should be able to maintain our progress improvement in EBITDA margins.
Right. So talking about the demand right now, how is the current demand like? And talking about the replacement demand as well. So, and we are seeing that it's such an unprecedented time. There is a lot of things happening globally. So in this scenario, how are you able to deliver to your customers?
Look, thank God the demand is steady. And if anything, if I were to deal with the two categories separately, the commercial tires, they are finding a lot of traction now, thanks to the whole lot of construction and infrastructure building activity going on in the country. So we are finding increasing movement of commercial vehicles, as also a higher output from the OEM manufacturers. So therefore the demand is rising, coming from there. In terms of car segment, definitely there's an upswing in the demand. You can see it from even the sales of the cars and backlogs and so on. So we are looking at a good future. To my mind, the auto industry should grow well, and the tire industry should also be able to go to nearly 8 to odd % in the coming couple of years, and should be able to maintain their growth. So back on this growth journey, we have been able to improve our sales presence in the marketplace. In both the quarters, incidentally, we've been able to gain our market shares in both truck and bus segment as well as in the car tire segment. That gives us a lot of hope and expectation. And of course, that has been backed by more innovative, new, differentiated products. And we propose to continue to do more of the same.
Right. So talking about supply chains right now, we are seeing that globally almost every industry is suffering because of supply chain disruptions. So what is the update as far as JK Tyre is concerned? And what about the input cost? We have seen that input cost has risen over the past some time. So considering all of these issues, the supply chain disruption and the hike in raw material prices and the input cost going up, what's your current situation like?
The supply chain got complete haywire in the peak COVID period. But thank God in the last 8 months, things are normalizing bit by bit, but surely. Both international supply chains in terms of shipping space availability, container availability, and the rates. The rates haven't fallen as much as it has fallen for instance, Southeast Asia to US. India to US rates have fallen very marginally, but there the rates have fallen less than half. But that's something else. That's a global shipping scenario we can't do much about. But the supply chain constraints have more or less eased off now, more or less, as I say, both domestically as well as international. But the cost that we incurred, extraordinary costs on account of that, we have suffered. And the material costs which have gone up, as I said, that at least they seem to be stable now. And we don't see it going up any further. If anything, as you were also just suggesting, may in the coming quarter, 2 quarters, they may taper off a little bit, a percentage point here or there, may come down. So that should help us in our margins, and they should help us in our sales.
Right. So globally there are recessionary fears, and do you think because of this your exports will suffer? We are seeing that countries like UK have announced recession, and even the Eurozone is supposed to slip into recession in some time. So considering all of this, do you feel that your exports will suffer?
That's certainly a concern, but luckily we have been directing our exports more to Middle East, to South America, such as the Latin American countries, and to African countries. So therefore that markets are safe. US exports have been large for us, so at least they will be more or less stable, I think. And hopefully we should be able to maintain and get away, if I may use the word.
Right. So very lastly, the union budget is just around the corner. What are your expectations? What should the FM do so that you benefit as an individual and the industry also benefits?
You see, it is very difficult to predict on the union budget and unfair, but all I can expect and hope is that government is quite aware of the need of incentivizing activity, industrial activity, production increase, cost management. So I'm sure they will make it a forward-looking budget.